Hi, welcome to the Weekend Investing Daily Bytes. This is May 11th, Tuesday. So we've changed the format a bit for this week, starting today. So we'll do the market view, we'll look at the performance of the weekend investing products, and we'll choose a topic of the day. It could be a question, it could be a stock, it could be any any new learning topic that we want to go through. So in terms of the markets, the broader markets were a bit soft. Large caps were definitely down. The small caps were buoyant since the morning. They stayed in the green for most part of the day. The Nifty Next 50 has been a surprise. Despite large caps being down, the Nifty Next 50, which is also part of the large caps, stayed in the green. For the week, the market is still looking quite nice, to 2.5 to 4.5% across the segments. For the financial year, we're already up in double digits in small caps, so all looking good there. In terms of sectors, the public sector enterprise stocks were flying today. That sector is up 3%. There was softness in the metals, and pharma and metals both were taking some profit taking here. The main action was in PSU banks and in public sector enterprises. For the week, surprisingly, this sector has moved up almost 10% without getting much notice, while the metals are also up almost 11% in the same time. And for the month, of course, the metal has been ruling, the metal space has been ruling the charts for 1 month or for the financial year. But this PSE segment, as we'll talk about more, has been silently going up as well. Some of the stocks that I was able to put up here, so BHEL, NHPC, Coal India, Concor, many of these stocks which were lying low have certainly started going up. A large reason could have been when market gets exhausted with sectors which are already running, it tries to churn into other sectors, and this sort of churn is possibly what is happening as value gets discovered in relative value gets discovered in stocks that have been sitting idle. So a lot of these stocks have underperformed over the years, but new money is chasing these stocks right now because these have fallen back relatively. In terms of weekend investing portfolios, again, a very mixed bag day. We had several portfolios going down and some going up, nothing exceptional. The MI25, the small cap portfolio overall is doing very well. It is already 30% up in the current financial year. And the MIST ATH is also up 20%, and the all cap is up 17%. So all are doing reasonably well, double-digit gains for most of the strategies, in line with whatever is the long-term CAGR for these strategies. So all in all, these are doing well. One interesting concept of comparing or having some sort of correlation between Nifty and emerging market ETF, EMA, is something that I want to discuss today. I had tweeted this yesterday evening, that EMA may create problems for Nifty. And why I said that was that I've been noticing a strong correlation between the movements in EMA and the Nifty next day. EMA is basically a ETF from in the US, listed on Nasdaq, and it essentially tracks the MSCI emerging market Asia stocks. So India is just one small component of this ETF. Maybe like 10-15% exposure is there to India or Indian stocks, and we will see in the next few charts how this has become sort of a correlation that we can track. Mr. Himanshu Singla requested yesterday that we make a video of this, and so we are doing this today. The correlation with Nifty, if you can see, this chart goes back to about 8 or 9 years, and you can see, while of course this is not a one-to-one correlation, what I've done here is that I've taken the dollar value of Nifty. So I've divided the Nifty by the USD INR in the same period and plotted it against the EMA. So you can see directionally they are moving very much in tandem. Maybe not in absolute terms, but directionally they are moving absolutely in tandem, and which basically correlates to the fact that emerging market flows are happening pretty much in sync versus country to country. So if emerging market flows are going out, they are pretty much going out of every emerging market. Emerging market flows are coming in, they are pretty much coming in. So there's not too much of distinction that India is getting as some special flows and other emerging markets are, Asian emerging markets are not getting it. It is not at least evident from here. Of course, everything that I'm saying here is purely speculative in terms of correlation, but it seems to me that there is more to it. So if we see over the last 7-8 years, the directional trends have been similar, and what we will see here in the next chart is that in the last year or so, while we've come out of the March 2020 hole, the EMA has sort of stagnated after March. So the stagnation in EMA basically also is signaling no fresh fund flow coming into emerging markets, especially from overseas investors. While Nifty was trailing or tracking the EMA till about mid-April, but it has now taken a leg up, whereas there has been no such indication on EMA. So maybe this is either an aberration which will get corrected, or this is a breakout that India is breaking out versus these other emerging markets. I do not know the answer to this, but my sense is that these two will converge again at some point again. So this is just a small brief about this EMA and the Nifty that I watch, and I'm happy to take more such queries if you have, and try to present them. It is also a learning for me when you ask me to talk about a topic. I also go back and spend a few minutes learning and researching that. So it's a win-win situation for me as well. This is all I had for this weekend investing Byte. So please look at the links in the description below, and you will find my email and the Smallcase website links there as well. Let me know if you have any comments in the comment section below. I look forward to meet you again tomorrow on the Weekend Investing Daily Byte program. Thank you.